To invest or not to invest in Apple stock? Apple Incorporated, AAPL, Wall Street's golden child, or a bubble on the brink? Apple Incorporated, AAPL, has become synonymous with innovation, market dominance, and cultural relevance. It's a company that has not only shaped the tech industry, but also redefined what it means to build a loyal consumer base. Yet, as we move deeper into 2024, Apple stock is raising questions that every investor should ask. Is AAPL still the unstoppable force it appears to be? Or are we overlooking potential cracks in its armor? Don't forget to like and subscribe for new investment analysis and data. Disclaimer: this content is for informational and entertainment purposes only. It is not investment advice. Always consult with a licensed financial advisor before making investment decisions. In this comprehensive exploration, we'll delve into Apple's financial strength, its challenges, and its future. Get ready for a deep dive into one of the most talked about stocks in history. A journey filled with surprising insights, contrarian viewpoints, and actionable information for anyone intrigued by the intersection of technology, finance, and luxury. The numbers don't lie. AAPL by the metrics. At $242.65 per share, Apple stock has reached an all-time high. This staggering valuation makes it not only a market leader, but also a significant driver of the broader indices like the S&P 500 and NASDAQ. With a market cap nearing $4 trillion, Apple's dominance is unmatched. But here's a critical question. Does this valuation truly reflect Apple's potential, or is it driven by market sentiment rather than fundamentals? Apple's stellar earnings report. Apple's most recent earnings report shattered expectations, with revenue from its services division, encompassing the App Store, iCloud, and Apple Music, reaching an all-time high. Services now account for 25% of Apple's total revenue, a promising sign of diversification. However, the iPhone still contributes nearly 90% of its revenue. While analysts like Dan Ives from Wedbush remain bullish, projecting a $4 trillion market cap by 2025, others are less optimistic. Critics argue that the company's reliance on iPhone sales creates vulnerability, especially in an industry as volatile as consumer electronics. Ask yourself, how sustainable is a business model that leans so heavily on a single product? The iPhone, Apple's greatest strength or its weakest link? The iPhone revolutionized the smartphone industry and has been Apple's cash cow for over a decade. The latest iteration, the iPhone 16, promises groundbreaking AI features, from advanced camera capabilities to real-time language translation. Yet, the iPhone also highlights Apple's biggest risk: over-reliance. What happens when smartphone demand slows? Global smartphone sales have plateaued in recent years. Competitors like Samsung and Huawei are chipping away at Apple's market share with equally innovative yet more affordable devices. This raises a crucial question. What happens if the next iPhone fails to captivate consumers? Moreover, with economic uncertainty and inflation impacting consumer spending, premium-priced devices like the iPhone may face resistance. Apple's ability to adapt to these market shifts will determine whether it can maintain its dominance. The ecosystem effect, a double-edged sword. Apple's ecosystem is one of its most lauded features. The seamless integration of devices, whether it's your iPhone syncing effortlessly with your MacBook or your Apple Watch tracking your fitness data, has created a consumer experience that competitors struggle to replicate. The golden cage? However, this walled garden has its drawbacks. Critics argue that Apple's closed ecosystem stifles innovation and locks consumers into a cycle of dependency. In an era where interoperability is increasingly valued, could Apple's approach backfire? A contrarian view. While many see Apple's ecosystem as a moat that protects its market share, a contrarian might argue it's a liability. As open source solutions and cross-platform compatibility gain traction, Apple could find itself at odds with consumer expectations. Question for you. Do you think Apple's ecosystem is its strongest asset or a hidden liability? Artificial intelligence. Apple's quiet revolution. The tech industry's latest obsession is AI, and Apple is taking a measured approach. The iPhone 16's AI-driven features, such as personalized Siri recommendations and advanced photo editing, are impressive but not groundbreaking compared to what Google and Microsoft are doing. The privacy play. Apple's cautious approach stems from its commitment to user privacy, a core part of its brand identity. While companies like Google monetize data through AI, Apple focuses on on-device processing to protect user information. But here's the twist. Could Apple's focus on privacy actually limit its ability to innovate? As competitors push the boundaries of AI capabilities, Apple risks falling behind in a race that could define the next decade of technology. The valuation question: is Apple overpriced? At its current valuation, Apple trades at a price-to-earnings (P/E) ratio significantly higher than its tech peers. This premium reflects investor confidence in Apple's ability to generate consistent returns, but it also raises a critical question. Is Apple overvalued? The bull case. Optimists argue that Apple's strong brand, loyal customer base, and diversified revenue streams justify its premium valuation. The company's ability to pivot, whether through its services division or new product categories like AR glasses, demonstrates resilience. The bear case. Pessimists, however, warn that Apple's stock price is more a reflection of market sentiment than actual performance. KeyBank Capital Markets recently downgraded Apple to underweight, citing concerns over slowing iPhone demand and growing competition. Ask yourself, are you buying into Apple's potential or the market's hype? Apple versus competitors. The battle for tech supremacy. Samsung, the hardware king. Samsung continues to challenge Apple with innovative devices that often outpace the iPhone in terms of hardware capabilities. From foldable phones to advanced displays, Samsung is setting trends that Apple has yet to follow. Google, the AI leader. Google's dominance in AI and cloud computing poses a significant threat to Apple. While Apple focuses on hardware, Google is building ecosystems driven by software and machine learning. Microsoft, the diversification master. Microsoft's success lies in its ability to diversify revenue streams. From enterprise solutions to gaming, Microsoft has built a portfolio that doesn't rely on any single product. Conclusion: Apple's ability to compete with these giants will shape its future trajectory. The luxury factor: more than just gadgets. Apple's brand is about more than technology. It's about aspiration. Owning an iPhone or a MacBook is as much a statement of status as it is a technological choice. The risk of exclusivity. But this exclusivity comes at a cost. As competitors offer high-quality alternatives at lower prices, will Apple's premium pricing strategy hold up? Engage with us. What's your take on Apple's future? Do you see AAPL as a long-term winner or a stock on the verge of a correction? Share your thoughts in the comments below. Final thoughts. Apple Inc. remains one of the most compelling companies in the world, but it's not without its challenges. From its reliance on the iPhone to questions about valuation, there are risks that investors must consider. Disclaimer: this content is for informational and entertainment purposes only. It is not investment advice. Always consult with a licensed financial advisor before making investment decisions. Don't forget to like and subscribe for new investment analysis and data.